All right, all you devils out there, happy Friday. Here we are, January 15th. It's about 11:40 for me. Of course, we're going to look at Bitcoin. Now, a little bit of relabeling here to accommodate this price action. Now, if you're relatively new to Elliott Wave, or you're still in that learning process of how to apply and adapt to market changes, here, don't be discouraged by this. This is incredibly common. It certainly, whether you're looking at your own chart or whether I'm recording something here that has a time and date stamp on it, it's always just a snapshot in time of what looks like it could be going on. But as is, if you'll pardon the ridiculously obvious pun, it's a fluid situation, right? So as price adapts, you adapt with it, and that often will mean relabeling. But that I don't consider that a negative. I in fact consider it a positive. What you're doing is adapting to what the market is telling you, right? So the market, as I often use the analogy, it's revealing itself. It's a slow, almost seductive process of revealing its actual intentions here. Now you can read too much into that if you like, or think that's just complete horse crap, but that's how I view it. It's a slow reveal of what it's actually doing, and what we as technicians are trying to do is adapt and find the most probable outcome, the most probable path based on patterns that we know repeat. It really is as simple as that. So as we look here now, with still some bit of there's a question mark here as to how this resolves. My view is my preferred path would be that we're heading lower. Now you say, well, I thought you were an Uber bull. Well, that's true, but as a technician, I get much more clarity if this comes down and we get a C leg down here and give us a 4 here. I get much more clarity and conviction into what's likely to come next. So we had looked at this last Friday, and the possibility here was that we had not completed this 3 here, is that this was an internal 3, this could have been the 4, and this could have shaped up, right? So we'll look at some of that detail. There was the possibility here that we were coming down here and we were going to go, well, I'll simplify it here. We would go up to get that 3rd here, right? And that would have implied 3, 4, 5, still seeking the largest degree 3 off of the COVID low, right? But given the price action that we have here, and perhaps that was a little overly optimistic given how short-lived this correction has been. So my view is if it takes a little bit of time here, I'm not discouraged by that. I'd love to see this low get challenged. I'd love to see it, right? Not only from someone looking for the next strategic opportunity to buy long again, but it just cleans up the count so that we know where we are. Well, do you ever know? Well, yeah, I mean, we get as close to, well, let me rephrase. We get conviction, right, based on what we anticipate and how we analyze what the market's doing. So it makes it easier to pull the trigger, right? And of course, as I will continue to preach, we want to buy it when it's going down, not when it's going up, right? Just simple, like the most rudimentary trading principle. Now, there are those that will differ with me on that. They'll say, well shit, you want to buy it when it's going up. Not me, right? I'm a retracement trader. That's what we teach, internal retracements, right? That's where you have and so why do I say that? Internal retracement that goes external, right? Why do we want to do this? Because if I'm taking the breakout here, right, my stop is much deeper. If I take the retrace here, I've got less risk with more reward, right? If I get a 3rd there, 1, 2, if I get the big 3. Right now, if I wait until I break out here to where it's safe, right? Well, this has been notorious throughout all of trading history, but it's particularly prevalent now where we live, where 95% of all the trading is computer driven, right? Double tops and double bottoms are so pervasive in the market. It's like the number one thing you have to be alerted to. So even if you were a breakout trader, my view is you never take that trade. You're just waiting. You're just asking to get bent over by a larger player there. Market doesn't matter. It's obscenely pervasive in FX, right? It's just unbelievably consistent in FX. But even if you were trying to get that breakout trade, you don't want to take it here. No, you want to take it here. right? So it's always still a retrace back to test that support, right? That's the trade that for continuation. But I digress a little bit here. But the idea being, we buy it when it's going down, not when it's going up. It's just, I know it seems counterintuitive, but if you want to be successful over time, well, again, I've been doing this for a very long time, and I have done, there is nothing I haven't tried, nothing I haven't tested. And I'm going to tell you right now, if you buy that breakout over time, you're going to get just buried alive, right? It's just eventually over time. You say, well, what about that breakout here? What if you bought that? Yeah, there are times where that's going to go, all right, and the one asset class where that's more commonly done is with the equities, right? But we're not talking equities here. So not to get off on a rant to start out here, but just to reinforce the idea, oh, this is coming down. Oh, that's good news, not bad news. All right, let's just kind of tune in here a little bit based on the relabeling here. So I'm on a 3-hour here on Bitstamp. Well, let's go to an hourly, see if we can make some sense of this. All right, so every Elliottician on the planet with just a rudimentary knowledge of Elliott Wave was looking at this going, okay, we getting a 3 or we getting a 5? Now it's right. I mean, it's not easy, right? So just because we see here, okay, we broke the. Let me go to platinum here. Let's go to the platinum zone. Okay, so here I've got 707. 764, 786, 887, and 90, right? So we're not quite far enough for a flat, if you're a purist, right? So purists say, hey man, if it's not 90%, can't be a flat. I'm not that extreme here. To me, right, and I've got senseis here who would smack me in the face if they heard me saying this. Between the 786 and the 887, I'll trade that as a flat. I will, right? I'm not such a purist that would DQ it for me. Again, others will disagree, right? It's what makes a market. So I'm not overly concerned about, okay, is it a flat? What is it? I mean, this is corrective. We can agree on that. Now, as we retraced here, there was always the possibility here that we were going to get a 5. We were going to get an impulse here. But now with the clear break, I think we can, and because there's an impulse here, I think we can, at this point, right, if you had to pick, I think we can lean into the idea that this is corrective, right? So what is that leaving for us? Well, is this a 3 or a 5? You can probably, it's ugly, right? Look at the giant wicks here, which are all algo driven, and we'll look at that in a second, right? That's why that's happening, right? This is all algo reaction, right? We'll look at it in a second. But I'm seeing a 3 there. So right, as an uber bull, why do I want this to go down? Because I want to know where I am. I want more certainty than I have right now. Because we can consider the possibility, right? If I just look at this swing low here, now I got to go back to just a traditional measured move here. Well, we're a little bit deep, but there is the possibility here that this could turn into a diagonal, right? So this would complete the correction. And this is the conundrum, right, with Elliott Wave, right? You're never sure until it completes, right? That could be a diagonal. I mean, the separation here is not ideal, but if we get another high here without taking out this low, every Elliottician on the planet is going to call it a leading diagonal. Now, there's a little bit of a qualifier here, right? So this 3 now is longer than 1. If it's going to be a leading diagonal into an extension here or into a 5th, well, this is going to need to be longer than the 3rd, right? For us to, right, if we're going to apply rule set, we need 3 longer than 1, 5 longer than 3. So there's a qualifier on this if it does go up there, right? I'm not going to be heartbroken if it does. I'm going to miss the trade because I'm waiting for it to get lower because I think this is more probably a B. Now, why do I say that? Well, aside from just the pattern here, which is members know, right? I'll often give this feedback. What's the simplest thing that I can see? What's the most obvious? Right? This sure looks corrective. This looks corrective, right? So it's a 3. This is a little sloppier because of all this wick action. But that, right now, if we had held here and gone up, okay, right, different story. But right now, this just looks like it's an A, B, and we're working on that C. Now, a few other things to consider here. Let me clean up the TA here before we get into just some bigger picture themes here. Okay, so we had looked at this section here. This was always a little bit tricky here. Was this a, and I think last week I had it this way. I was thinking we went 1, and this was A, because this looks like a 3, and we had a running flat here, right, with an expanded B wave. You know, I went all the way down to the 15-minute to dig it out. Oh shit, let's see if I can get it here. Let's see if I could make it work as a 5, and I'll be damned if you can't. Right, you can get it to work. All right, so I'm down on the 15-minute, and so this has me rethinking it here. So I can go 1, 2, 3 is longer than 1. Yes, I've checked. Here's a little ABC into the 4. We don't overlap that 1. So I can get this into a 1 here. All right, now this, again, it looks like a 5. I know, but you're going to have to, here's how you're going to have to do it, right? So again, Elliott's not perfect, right? But can I make it work? 1, 2, 3, 4, 5. All right, so I got an A, I got a tiny little A, I got a little B, and then I got a C. Now, where do I go? All right, so if I'm thinking it's a 2, well, I knew between the 50 and the 618, right? Here's my algo target, right? So they start buying at the 50, they'll defend to the 65, so they get their target, right? They get 3rd, all the way to 4th, right? So that keeps going. So that's a reasonable spot here for this too. So it looks like, based off of that, let me go back to, well, let's go to a 30 here. We'll just kind of work through this, right? So guys, this is always a good idea, right? To check them every single swing, check the fib relationship. What's most probable? How far did we go? Can you make a deduction based off of that? Well, this looks to me like this is my 3. I got a little ABC here. Now, it could be, right? You could count this 2 different ways. You could do it this way, right? You could do it this way, right? But then you got another running flat here, 1, 2, 3, 4, 5, right? You could do it either way. So let's just measure it, see which makes more sense, right? So this right here, okay, well this, at least here I'm clearing 100, right? So this is a candidate. Now, you know, you'd have to do a 1, 2, 1, 2, 3, 4, 5 into the 3 ABC 4. I don't know that it matters, right? At this point, now we're over off to the side. I don't think it matters, right? However you want to label that. I mean, this works just fine, right? We get to the same destination here. We completed the 5th of the 5th of the 3rd at this degree. So we got to pull out, say, okay, what did we just complete? Well, here's the actual start of it here. So we're going 1, 2, 3 here in blue. All right, so if I take it, it's 1, 2, 3, 4. Here's the 5. Right? So you look at it and say, well, does it have the right look? Yeah, it really does. Looks just like a textbook, like, you know, right out of an Elliott Wave manual. Right? It looks just perfect. Right? So we complete the 5 here. So I'm comfortable with this 5. Again, I'm not saying there's no possibility that this doesn't go up here, and I'm like, shit, okay, well, you know, but relabeling again. But right now, it looks to me like path of least resistance is down. Now, what else can we do to build a case here? Because then what we're trying to get to is, the real question is, where's the next opportunity for strategic, technically based buy? Where is that? Well, is it right here? Right, on the idea that this is going to be a diagonal? Well, we just looked at it. You're in the zone. You're in the buy zone, right? Remember, algo does not care about an Elliott count, right? You're between the 50 and the 618, so there's absolutely nothing to suggest that this couldn't go right here and complete that, right? And then we got a 5, right? Well, then even if we got that, well, then what do we look with? Same thing, right? We're still looking for a 3 to come down. We're still looking for that 3. Now, if this goes 5, well, shit, I didn't need to draw it right here, but we're still looking for this. Right, before we go again. Right now, I'm dying to get this. Now, there's a few things here that make me think that this is probable. Now, one, you're projecting, right? So I don't know, obviously, that it's going to go there, but I'm say it this way: I'm hoping it goes there, because then I know where I am and I know exactly what I'm going to do. Right here, if it does this, well, you know, again, I'm not sad because I'm long as hell, but I'm not sad about it. And so then it just, so your opportunity's not here. Then you're going to wait until, I mean, again, we don't know where that tops, but not if you get the 1, right? If you, oh, Jesus Christ, I'm still struggling with that. Now I'm waiting for that, right? So that's just a matter of, okay, now I'm just waiting, right? So I wait till the next time. Maybe this keeps going. Maybe this, we're off to, you don't know. Again, if you're long, as I'd like to think certainly members are, well, you're not disheartened about that. But you're still waiting. Where's the next strategic opportunity to get long? Because the name of the game here is to get more Bitcoin. So we could either just do as I advise many people who are not technical. whether it's family members or friends, or say, how do I get into Bitcoin? I tell them the same thing. Take X number of dollars per week and just buy it every week for the next 5 years, whatever you can afford to do. Right? Because wherever it is 5 years now, it's going to be higher than where it is now, in my view. So that's what I advise people that are not technicians. But for us here, we're trying to be precise. We're trying to use technical precision here for a perfect opportunity here to buy it with the lowest amount of risk. That's what we're trying to do. Now, can we do it? Do we always do it? Well, of course not. But that's the objective. So if we're gonna retrace and we put in the 3 here, well, it's not hard to back out in here and say, okay, where's the likely path? If this 3 is done, if it is done, and here's my 2, all right, well, this isn't hard. All right, well, let's get up to that. Make sure we're right on that pivot. All right, well, a wave between the 38 and the 50, right? With Bitcoin, that's not surprising, right? We've got this volatility, right? We've retraced here. We just looked at it a little beyond the 786. If we're coming down, now, if it's a 4, we don't really want it to go as far as the golden zone. We'd much rather see it hold here around the 50. And you can kind of put together a case here, say, all right, okay, well, that looks like I've got some structure here. I got a little high volume node right here at the 50. Now maybe it goes deeper. It wouldn't invalidate. I mean, this is how far we'd have to go to invalidate. So it's not a death blow if it goes lower, right? We know, well, one thing we're going to know for sure, there will be an algo that will respond there. Period. Where we don't have to wonder about that. I'd rather see it hold, right? And the theory is in Elliott theory, you don't want the 4 that deep because it reduces the distance to the 5th. Now you say, okay, well, that's Elliott theory. That's an algo target, right? The algo doesn't care. The algo could not possibly care less how it gets here. All it cares about is going there, right? It doesn't matter if it gets there from this pivot or this pivot. Doesn't matter. Right? It's just a piece of code. It couldn't give a shit, right? There's no guy sitting there going, I don't know, should I buy the 50 or should I wait for the golden zone? That's us. That's what we're trying to do. Software, got a target. It's that simple. So for us, if this is going to come down again, well, we need to use the tools that help guide us to say, okay, where do I want to be really looking? Where do I want to have this alerted? If this is going to play as an ABC, well, what's most probable? What does it typically do? Well, first target would be this low, right? So the idea that this low is likely to get tested, and it may be often, right? It's structure, right? It's a prior high or an area of congestion that's likely to get tested. So we can just, the most rudimentary thing is just put your internal fib relationships on it. And nothing says we have to come to the 50, right? We could have a running flat here, right? I promise you, if we do this, right? If we do this and go off, we'll be calling it a running flat, right? We will. Right? I don't know what else you'd call it here. I don't think we need to be going into a WXY just yet, right? There's not enough separation in that to really to overcomplicate it, right? And that's often, you start to get some confidence in your Elliott wave and you get some knowledge, right? I often have to kind of bridle my members and students to say, whoa, okay, you've got this into a double zigzag. Do you really need that? Right? Often, it's the simplest thing, right? That almost always will be the path. Not always, but if you're going to defer, what's the simplest possible path here? Well, ABC looks to me like the simplest path. So I want this to come down to right here. Right, so let's call it under 30, right? So here's 30. Well, here's a little bit above the 50. Is 30 here. If we can buy any Bitcoin under 30, I think you got to. That's a heads up, right? I would certainly have an alert on that, so that if it hits, you're at least alerted to that opportunity, right? No, we don't. Again, it could go lower. So what I advise is a portion of it here. I'd actually start buying here for the potential double bottom. I'd buy 25% here, maybe 30% here, and the remainder if we're going that low, just off of the fact that I know how responsive Bitcoin is to algorithms at the golden zone. I'm going to look at it here in a minute. Shit, I'm already at 19 minutes. Okay, so let's having said all of that, let's look at it technically, and then we'll wrap up with a few thoughts about why it might go down here. So technically, I don't know if we even need. I mean, you guys know this. All right, let's do it. We got a lot of new members that have come in lately here, so let's just review here so you understand. Okay, so I'm going to take this one here. I'll just hide it. Okay. So this was an interesting pivot, right? And last week we had identified this as a candidate. Remember last week we were thinking, okay, possibly it's 1, 2, 3. We're coming down for a 4. We're going up for the 5, right? You don't know right now. Now it rolls over, and now we know. But this pivot was significant. So we were looking at that saying, well, if that's the 2, that's the 3, same thing we just did, right? So we pull from here and we go right there. Now look what happens here. We go right into the golden zone. This actually, this is worthwhile to go through this so that you guys understand this. So we go directly into the golden zone. Look at the reaction. Right, see, it's important that you understand. It's not that, oh, we hit golden zone, so we must be going to target. No, that's never, ever, ever the assumption. You can't assume that. What you can assume is that there's a high probability that you're going to get a reaction at the golden zone. Right now, this piece of software has this as its target. But the other thing we have to remember, there's always, and I mean always, an algo on the other side, assuming you're not at all-time highs. If there's a higher pivot, there's always an algorithm on the other side, because the people that put these algorithms into the market, they don't care which side wins. They do not care, because eventually they get on the right side of it. Eventually. Right? They can take 3, 4, 5 losers in a row. They do not care one bit, because eventually they get on the right side of it. And then it's one after the other after the other. God, I was showing members today in the RTY. I think we had 5 measured moves in a row that all went straight to the 23.6, all out of the golden zone of the 50. Just 5 in a row, all the way down. And now the same thing's happening on the way up. It's just, you know, I try and preach this. The asset does not matter. It's the same algorithm in every asset class, right? Until you absorb that and respect it and understand it and know what it's doing, you're blind to what's actually going on in the market. Now let me carry forward here. So here's the reaction that we got. So here's the golden zone. We get the reaction. It stops. What happens? Why would it stop there? Right? Well, remember. Always, always, always an algorithm on the other side. Right, what do? Right to the sell side algo. It literally tags the 618, goes through by a tick. So we have 2 algorithms fighting it out. We have this one that went to this golden zone trying to get there, and then you have this one from this pivot up here that goes here, goes straight up to the golden zone, and look who wins. Goes right to the 23.6. Boom. And then look, right again, reaction. It's not trend change, it's reaction. Because, so why do we get a reaction there? Because the sellers are buying it. Right? That's part of what causes that reaction. Now you're also, you can make the case, see a price action guy doesn't pay attention to that algorithm, say, oh, we just came up to some structure here, so it's a little reaction off of that prior pivot. Maybe they don't know about that algorithm, right? I'm going to tell you that's why, right? It's they're taking profit here. Okay, so that said, right, but you could still make that case. Oh, it's price action. Well, then you say, okay, well, we got the 23.6, but that wasn't the low. What happened next? Well, remember, this keeps going until it turns the opposite direction. So I go now to the target, and I go to the pivot that we used right here, and we see it again. Right? Look, I know that maybe that's a little bit hard to see. Right? It's just repeating. It's the same thing. That's why I keep telling you guys, they don't care. One, right to the golden zone. Here it is again, to the tick. Right? Reaction. Now, let's go here. Right? I got to dig in there a little bit. So you see the reaction here. Right? Let's take that one off. Right? It's just the same thing, guys, over and over and over again. Now we go here. Right? We go to that one here. This one just makes the 50. And now, oh, what happens? We don't make target. This one gets stopped out right here. So this sell side algorithm here that took the short here, remember they start at the 50, they defend to the 65, doesn't get to target. Ultimately gets stopped out here. Well, so now they flip, right? Again, they don't care. They don't care. Now we're on the other side, right? So now this one I think did break actually by just a hair. Nope, yeah, it did. Right, so we get a slight break here and then a secondary break here. So even if they're in this, this gets a little sloppy in here. Right, you get a couple of slight breaks. Not uncommon. If you start to see a little bit of break on either, this means it's happening on a higher degree. I'm down at a 15-minute. So the sloppiness here tells me I gotta back out. Let's bring this down just a hair. This is 65 to the tick, but it breaks this side here, but now we get the break. So here you'd have been thinking, okay, advantage bears, but right, it goes up and then goes the other direction, right? So it's not every pivot down to the 5 minute, down to the 1 minute. I mean, they're going to break. They have to break or the market forever goes sideways, right? They break is kind of what I'm trying to emphasize here, but not after they got 1, 2, 3 on the way down, and now they're going back the other direction. All right, so now as we sit here looking at this, we've had a little sloppiness down here, but you know, it's not uncommon, and up we go here. So now as we're coming down here, this is starting to look like perhaps we're getting some algo participation in here. So what are they doing? Well, you just got to check them off one at a time. Okay, so here's 50. We got third target. I don't think there was anything. I think this was already too high. But here's the 50 getting second target here. So this is getting some legs. So now when you see this where we've gone so far, now you might start thinking, okay, is there an Elliott count in here that I can work with? Maybe, right? So maybe you can go into a 1, 2. All right, so this perhaps I can go 1, 2. Oh shit, I got a big one there. Let's bring that down, something more manageable. Let's go to micro. Put it in yellow here. Okay, so 1, 2. All right, maybe I'm down for my 3 here. 1, 2, 3. Could be 4. We'll see. All right, if that's done here. Remember, my view is I want this lower. All right, let me go back to a 60 here and see if we can put together, because shit, I'm already at 26 minutes. Okay, here's where I want to buy it down here. I want to buy it under 30. I mean, here's 30, here's 21. Anything in this range, really, if I fatten this up. Pretty much there's 30 right there. I want to buy it somewhere in here. All right, so if I can get this to come down, I'd rather we get here like this, right? That's what I'm looking for. Is that 1, right? Maybe this ends up being 1. Somehow I want to get down here in a 5 because I need that 5 to finish it. Right? We don't buy the finishes off of 3 unless there's a 5 in the third. If this was ABC, I could buy that, but right, we don't get it. So I want this to come down and give me a 5 so I can buy that 5. All right, so we'll see if we're going to keep going here. Now, here's just in conclusion, there's a couple of things here technically we just add on to this. A couple of things, right? So we always want to look at a pitchfork on this. So note here, we've just tagged the median line. So I've got on here, this is a modified shift because it tagged the median line just perfectly. For members or new members here, right, just to review, a modified shift is an exact replica of a channel. All right, so the center line becomes the median line, right? Long-term members, we all know that, right? But we've got a lot of new members. So tagging that median line, you know, some people are fine with it in a channel. I kind of like the target of the median line. So that perfect tag here now, you see the reaction here off of that pivot. Again, it's not technically perfect here. All right, we're in between. That's right. But so is it going to be the 50? Is it going to be the golden zone? Oh, it looks like it's the median line. Now, so we've had a little reaction. But what we want to see is for that little reaction to lead to lower prices so we can get this to come down here. That's what we're after. And then you start looking at this in terms of a potential buy location down here. The idea, I'm going to take the channel off here, where I could buy it down here for the 4 somewhere in this range. I want this to continue to come down. I want to get this so I can buy that with confidence. Doesn't mean that it couldn't go lower, but I'm going to be buying here with both barrels because I now have confidence in the Elliott count. I know where I am. I know I'm at structure. I know where the fib relationships are. So can I get that corner here? And I know I'm playing a 4 looking for the 5. Now, the only thing which we've not done a lot of work on here, but it's not uncommon, it's easy enough to do, would be to put some fib time on this. And I've got this right here. So we might look at this and say, okay, we're just looking at the length of time of this move here to this move, looking for, let me pull this off here. So how we might use, in the same way that we would look at the length of the swing projected from the pivot for a price direction here, doing the same thing with time here. I'll just draw it. Unlock that. So you can see it, right? So you see here, I'm just taking that length here up to the B, and then I'm saying, okay, well, here's 618 of it. Here's 100% of it in time. Here's 16182, 2618. That's the only ones I really look at. So if I can come down here and get this somewhere between, you know, maybe it's here, maybe it's here. If I can get this somewhere between the 618 and the 100% length in time of the length of the A projected from the B in time, Right? What's one other thing that I would put on there? Well, of course, I would look at it in context of price, right? So the length of the A projected from the B, pull that over. Now there's the 100%, the most common target. That's a traditional measured move. Length of the A projected from the B, we get 100%. Now all of this starts to really get pretty sexy right here. Structure. I've got fib time. I've got median lines. I've got 100% measured move here. I've got a potential Elliott count here that comes in and completes that 5 down here. Now, is it going to do this? Well, fuck, I don't know. But I sure like the opportunity if it does. If it does, I'm aggressive there. Now, here's the last thing. Shit, I'm already at 30 minutes. Here's the last thing to think about. And we talked about this a little bit last week and the week before. We know that there's approximately 900 Bitcoin a day that come out of the mining, right? And that is just being absorbed as fast as it can be by the likes of PayPal, Cash App, Grayscale, the institutions that can buy them as they're being mined. That appetite is voracious, right? It's just they're all being bought. So if you're a whale or someone or an institution or someone looking to buy Bitcoin, how are you going to get it? Right? If you can't step in front of, and maybe you can, right? Depends on the institution. Maybe you can step in front of PayPal and Cash, but you're going to be one hell of a big player if you're doing that. Where else are you going to get the Bitcoin? Well, if you're a whale, the easiest way for you to get that is to drive out weak longs, right? Or longs that are trading with leverage, right? Because they can do it, because they have the muscle to do it. So the simplest thing for them to do is to push the price down, to freak out all the weak longs, right? There are longs like me, like you're never getting me out. Doesn't matter. I have no stops, right? On my long, I should rephrase that. I have no stops on my long-term holdings, right? If I'm swing trading, always a stop. But in terms of my long-term portfolio, you're not stopping me out. Nor you should have a portion of your portfolio that has no stop on it, so that you're not at risk of being squeezed out by some volatility. Now, it could be substantial. If they really want to freak the market out, they'll take it down here to 20 grand. That would be, and that certainly wouldn't disrupt the Elliott count. Be perfectly consistent. But you could see that happening. Oh my God, people are going to be absolutely freaking out. Look at this last week. You had headlines on Bloomberg, bear market in Bitcoin. Bitcoin is crashing. CNBC, Bitcoin move is over. The crash is in. Here, Jesus Christ, right? And so people are so easily fooled out of their Bitcoin, right? It's been scripted. It's so easy for them to do it. Oh shit, right? So Betty Lou, who her cousin said, "Oh, get some Bitcoin." All of a sudden, she sees that headline, she panic sells. Who's buying that? Who's buying it from little sweet Betty Lou? I shouldn't say it that way. Who's buying it from Trader X, who's been scared out of because she saw the headline on CNBC that Bitcoin is crashing? Who's buying her sale? Right? Institutions are going to buy that all day, every day, any way that they can to shake you out, whether it's here or here. Their goal is to get your Bitcoin. Do not let them steal your Bitcoin, because that's what they're going to try and do, because there's nowhere else to get it. Where else are they going to get it than to pick your pocket? So for all of you who are in here trading off the 5-minute with leverage, man, make sure you've got a finite amount that you are allocating to that. Do not let them take your Bitcoin, because they are going to come for it. I promise you, they're coming for it. Anything they can do to freak you out, to get you to panic sell so that they can just buy it, right? It's uniquely perverse in Bitcoin because of the finite supply. But that happens. We can go back to Warren Buffett, right? You buy when there's blood in the streets, right? When people are most freaked out, that's when strong hands take it from weak hands. It's the same phenomenon here. It's just so pronounced because we have this incredibly unusual limited supply in Bitcoin and this voracious demand. There's not an institution on the planet that doesn't know Bitcoin's going higher, right? They all know it. They all believe it. They're all looking to get it. How are they going to get it? How are they going to get it? Well, they could buy it at the market here. Who are they going to buy it from? Right? When this was coming down, I promise, well, shit, you know that, right? The liquidations are happening all the way down. You see it. Wish God, there's something on my Twitter feed. It's crypto liquidate. I can't remember what it's called, but I see it all the time. It'll be 150,000 Bitcoin liquidated here on the slightest little sell-off here because of leverage, right? So don't let them come get it because they're coming for it. They want your Bitcoin, right? Because they don't care if it goes to 10,000. They're just going to buy because they're thinking about where it's going to be 5 years from now. Don't let it happen. If you're in here on the 5 minute playing with leverage, have a finite amount. That's it. No more. If you lose it, you don't touch your long-term holding. Don't let them get that. All right. I think everything I can add here. This strategically, right? Where can we strategically buy, right? And again, if this is me, I'm not putting a stop on that. This is a strategic buy for me. I'm not going to buy with leverage. If you're going to buy with leverage, well, where are you going to put a stop on it? Well, I mean, you got a little bit of room, but I wouldn't go too far below. You got a pretty big support zone here. I wouldn't let it go too far beyond 22, 21, right? If you're trading with leverage, right? Now, so then you got to do the math and say, well, how much leverage can I afford if it's going to go from 30 to 20? Well, probably not as much as you're thinking, right? Because you're thinking, oh, if it comes here and turns and I get that pivot, that guy on YouTube told me that maybe there's a pivot there, I can get that at 29 and then it's going to 55. So I'm going to buy a lot because I want my Lambo now. You know, that's how it happens, right? You were thinking about how much you could make, not could they get my Bitcoin if I over leverage this, because they're going to buy it. The other side of your stop will be just a giant whale sitting there just to swallow it whole. All right, guys, there you go. Be careful, right? Now, I'm not saying, be scared of this, right? Often it's the trade that you're most uncomfortable taking that'll be your best trade. All right, keep that in mind. All right, guys, that'll do it. We'll wrap here, and oh shit, I don't know if we're doing it. Maybe we'll take a look at ETH. Okay, guys, talk to you later.